All right, so listen to these two stories. United Commercial Bank misrepresents its financial position and scores $300 million in the TARP bailout. It then loses it all. Meanwhile, a UCB employee embezzles $235,000 to support his compulsive gambling habit. So who went to prison? Well, Bloomberg's Jonathan Weil went inside this true story, joins us now with more. It's a tale of two crimes, I guess you want to say?
Well, I mean, you asked the question. One's
that's
definitely
why I put a question mark.
A crime is a matter of court record. Which one goes to prison? Well, obviously, this being America, where little pigs get slaughtered and hogs get fat in the banking industry, the guy who stole $235,000 to support his compulsive gambling habit got 27 months in prison and now resides in a medium security federal pokey, whereas the folks who misrepresented the bank's financial condition, lied to the bank's auditors, and ended up getting a $300 million bailout package under the TARP program and proceeding to lose it all. No charges, not even civil charges so far against any of these people. And there's no indication that any of them will. That's the story of the whole banking scandals of the past few years, is that the smaller the fraud, the harder they fall.
Well, it's also easy to put one guy in jail and prove that he did something wrong than it is to put a bank in jail, right? I mean,
well, we're talking about the people who ran the bank, whether you talk officers, directors, upper management, middle upper management. The reason this is topical again is that just in the last couple of weeks, the FDIC's Inspector General came out with what they do, a material loss review. It's what they call it, on this bank's collapse. And basically, it's an autopsy report. Why the bank failed, what were the causes, who's responsible. And we get more details than we ever had before about why this bank, which cost the FDIC $1.5 billion to its insurance fund, went under. And they were cooking their books. They were lying to their auditors. They were lying to the finance department, internal auditors. I mean, this was a bank that was just completely bearing its losses, backdating documents, altering documents. If they can't get a criminal conviction here against somebody at this bank who is in charge of something, I mean, it looks like it should be a layup.
So what's the solution? I mean, how do you go forward so that it's not this disparate system?
You have people in the government who think it's their job to go after white-collar crimes that may be more difficult to prosecute than simply catching the guy who was taking $235,000 and sticking it into an account under a fake name somewhere.
Have you talked to Robert Khuzami about this?
Oh, I haven't asked Robert Khuzami about this one yet, but hopefully the folks at the SEC have read this.
I mean, it gets really to the heart of the issue, even in situations where you can't automatically sniff out fraud, right? If you have the directors be personally liable and responsible for what goes on in the bank, you're less likely to have such monumental failures.
But this is an extreme case too. I mean, this is the KPMG. It's not very often the KPMG, which was the auditor and had given a clean audit opinion, only to be alerted a month after they did so by the folks at the FDIC. There was a problem here,
right.
And then KPMG within 5 days sent a note to the audit committee of this bank saying, we have found evidence of illegal acts, having to do with the way your bank is doing its financial reporting. Illegal acts, that auditors don't say things like that very often. So, yeah, there might be lower standards we can hold officers and directors to try to hold people accountable for when their banks screw up and cost taxpayers money, let alone their shareholders. But in this particular case, this was an egregious scam that this bank engaged in. And it not only ripped off the FDIC, not only ripped off shareholders, but it also ripped off the Treasury Department.
All right, so fantastic column once again. Jonathan Weil, I want to remind you he's a columnist for Bloomberg, so the opinions expressed are his own and not necessarily those of Bloomberg LP, but you should definitely check out the story on our website. You can see it at Bloomberg.com.